Tariffs are about making America rich again and making America great again, and it's happening, and it will happen rather quickly.
Foreign car makers like Hyundai and BMW to be opposed to imports.
Workers at a Georgia Hyundai plant describe a chaotic scene after an immigration raid at the facility. Federal authorities say Thursday's raid was the result of a months-long investigation by several agencies.
A major crisis is unfolding in America's automotive heartland as Hyundai, one of the world's largest automakers, faces mounting pressures that could force the company to reconsider its future in the United States. What began as a symbol of successful foreign investment is now becoming a cautionary tale about the unintended consequences of aggressive policy shifts. The South Korean manufacturing giant has transformed parts of Alabama and Georgia into thriving industrial centers over the past 2 decades. These facilities have provided thousands of jobs and billions in economic investment, representing what many considered a model of globalized manufacturing success. However, recent developments have thrown this partnership into serious jeopardy. The most dramatic blow came during a federal immigration enforcement operation at Hyundai's Georgia battery plant expansion site. Federal agents conducted what officials described as the largest single workplace immigration raid in United States history, detaining 475 workers in a single day. The operation brought construction to an immediate halt and created chaos throughout the facility's operations. Many of the detained workers were present in the country on legitimate short-term visas, but were legally prohibited from working in industrial positions. The enforcement action exposed a complex web of immigration regulations that many companies struggle to navigate, even when attempting to follow proper procedures. The raid effectively paralyzed a billion-dollar clean energy project that was central to Hyundai's American expansion strategy. The immigration enforcement came alongside escalating trade tensions that have created additional financial strain. New tariffs on imported automotive parts have significantly increased Hyundai's operational costs, with some components facing duties as high as 25%. These additional expenses are being passed directly to consumers, forcing the company to raise prices on popular models by thousands of dollars. Financial reports from the second quarter show Hyundai's profits declining by more than 20% as these combined pressures take their toll. The company's once competitive pricing advantage in the American market is rapidly eroding, making it difficult to maintain market share against domestic competitors who face fewer import-related costs. The ripple effects extend far beyond Hyundai's corporate headquarters. Thousands of direct employees and countless more indirect workers in the supply chain face uncertain futures as production schedules become increasingly unpredictable. Local businesses that depend on plant workers as customers are already reporting decreased foot traffic and reduced sales. Small suppliers who built their operations around steady contracts with Hyundai find themselves with idle warehouses and unpaid invoices. The economic ecosystem that grew around these manufacturing facilities is showing signs of serious strain as the anchor company struggles with mounting challenges. Consumer impact has been immediate and severe. Car shoppers who once viewed Hyundai as an affordable alternative are finding popular models priced well beyond their budgets. Dealerships report that customers are delaying purchases or walking away from transactions entirely as sticker prices climb beyond middle-class affordability ranges. The combination of higher costs and reduced consumer demand has created a perfect storm that threatens to undermine years of careful market positioning. Showrooms that were once bustling with activity now sit largely empty, with unsold inventory accumulating on lots across the country. Industry analysts warn that Hyundai's struggles represent broader challenges facing foreign automakers operating in the United States. The unpredictable policy environment has made long-term planning extremely difficult, forcing companies to constantly adjust strategies based on shifting regulatory landscapes. The situation has created what experts describe as a labor paradox. While factories desperately need workers to maintain production levels, immigration restrictions have severely limited access to the skilled workforce necessary for complex manufacturing operations. This mismatch between labor demand and supply availability threatens the viability of manufacturing expansion projects across multiple industries. Behind closed doors, Hyundai executives are reportedly exploring alternative strategies that could include shifting production to other countries. Vietnam and India have emerged as potential destinations that offer lower costs, more predictable regulatory environments, and access to growing labor pools willing to work in manufacturing sectors. The prospect of Hyundai reducing its American footprint represents more than just one company's business decision. It signals a potential shift in how international investors view the United States as a manufacturing destination. Countries that once saw America as the gold standard for industrial investment are beginning to question whether the risks now outweigh the benefits. This uncertainty extends beyond the automotive sector. Other industries dependent on international supply chains and foreign investment are closely watching how the Hyundai situation develops. A precedent of major manufacturers relocating operations could trigger a broader reconsideration of American manufacturing strategies among global companies. The broader automotive industry is already feeling the pressure as tariffs and trade disputes disrupt supply chains that took decades to establish. Asian automakers across the board report declining profits and operational difficulties as they navigate an increasingly complex regulatory environment that seems to change frequently and unpredictably. For American consumers, these industry-wide challenges translate into fewer choices and higher prices across automotive showrooms. The competitive marketplace that once offered diverse options at various price points is consolidating into a more expensive, less accessible landscape that excludes many potential buyers. The current crisis highlights the complex relationship between trade policy, immigration enforcement, and economic development. Policies designed to protect American interests may inadvertently harm the very communities and industries they aim to support. The challenge lies in finding approaches that balance legitimate security and economic concerns with the practical realities of modern manufacturing. Economic development officials in Alabama and Georgia are watching the situation with growing concern. These states invested heavily in infrastructure and incentives to attract foreign manufacturers, viewing them as engines of economic growth and job creation. The potential loss of major employers like Hyundai could have devastating effects on regional economies built around manufacturing clusters. Local communities that welcomed Hyundai as a source of economic stability now face the possibility of plant closures or significant downsizing. The psychological impact extends beyond immediate job losses to include broader questions about the reliability of industrial development strategies based on international partnerships. The Hyundai crisis serves as a test case for American industrial policy in an interconnected global economy. The outcome will likely influence how other foreign companies approach investment decisions and could reshape the landscape of American manufacturing for years to come. The stakes extend far beyond one company's balance sheet to encompass broader questions about America's role in global supply chains and its attractiveness as a destination for international capital investment.